Now, you mentioned in gold that, it should be a weaker time for gold, but gold is hitting highs. And there's been unseasonably strong central bank gold buying over the past year and a half. I'm just wondering, do you have an opinion on what's driving this? I mean, is it simply geopolitical tensions, or are there other factors potentially?
Well, I think, in many ways, central banks are learning the challenge of having a digital asset held by a third party, right? So, Chinese central bank, the Russians, and other adversarial central banks are recognizing that if you hold your bonds at custodian in a European or U.S. custodian, right, they can just take all your money away. And so, what are these central banks doing? What they're doing is they're basically choosing to hold the physical asset which they can control, rather than, which is, the gold is the physical asset for which they can control, rather than rely on a situation where where they could easily have their assets confiscated. And the issue with the gold market is it just doesn't take that much. Like, the amount of money stock out in the world, or bonds, or, there's $10 trillion of reserve assets. If central banks just took a few percent of their total assets and moved it from, fiat or bonds into gold, that creates a huge price pressure on the gold market. And that's essentially what we're seeing, is that despite the fact that interest rates have risen, gold prices, real rates have risen 300 basis points in the last 18 months. But gold prices are basically at highs. How can that be? It's because of the demand. What do you call it? A geopolitical conflict demand, just a diversification demand. Look, central banks realize that holding the physical gold in their own vaults in their country is the safest way to protect themselves and hold reserve assets, and they're moving in that direction. And on some sort of secular basis, central banks' holdings of gold are very, very low. A few percent. We're not talking, relative to where they have been in the past at 50%, 75%. It's not crazy to think that this trend will continue for the next few years. And I think that's interesting, because the gold rally has happened at a time when there hasn't been retail demand. So imagine what you get is you start to get some, actually retail has been selling, like gold ETFs have been
Yeah.
declining in AUM. Imagine you start to get the recognition that gold might be a good asset from the retail space. That could really create a heck of a squeeze on the asset on a forward looking basis.